morning, Amanda.
Good morning, Simon. How are you?
Very well indeed. How's the marathon training going?
It's going very well, actually. Well, I say it's going very well. It is going very well, but it's very hard. So I managed another 7 miles this morning, although I did think that I was going to be sick. So,
I think so. Who's our special guest today?
It's a slightly calmer, hopefully. Yes, we've got this one. It's Ahkil Mair. We're delighted to have with us today. He's from our mortgage broker, and basically does all things mortgages, financial advisor. He's been in financial services since 2002. The property investor himself, which is really helpful because he knows what he's looking for. Got some really good advice for people generally, which I'm sure our listeners will enjoy listening to. So welcome, Ahkil.
Thank you, Amanda and Simon. Thanks for having me. Nice warm welcome. Thank you.
It's a pleasure. I've got an initial question. How are you finding the market at the moment? Obviously, we're kind of out of the initial SDLT holiday. That must have been chaotic. So has it quietened down, or has it just been consistently stressful?
Well, listen, the last 12 months or so have been chaotic, and we're one of the fortunate businesses in business arena at the moment where we've been very, very successful compared to previous years. So there's been an upshot in the inquiries, completions, and so on and so on. So we are very fortunate to be the position that we're in. It is tapering off, I would say so, because of the stamp duty being tapering off as well. We've got the next stamp duty ending in September, at the end of September. So it is tapering off, but to be honest with you, we've never quietened down. We don't have no expectations of it quietening down because a lot of our clients are portfolio and seasoned investors, right? So they keep us busy and they're always out there to find a deal.
So what would you say is your main focus residential, commercial? Is it a mixture?
Yeah, so we don't have any, we don't pick and choose of what types of clients or what types of business we look for. We're happy to help all our clients, whether they're first-time buyers, portfolio landlords, or in the commercial arena as well. So for us, it's business as usual. I would say from a percentage split wise, I would probably say about 70% of our business is buy-to-lets in the personal name or in a limited company capacity. The other 30% is probably a mixed bag between owner-occupied, main residence, and bridging and development finance, which is a major finance at the moment, major finance or clients wanting to take up bridging for numerous reasons.
So why are they? Is it lenders are backing off? Is it they're not, the deals are coming too quickly? Because obviously if you're looking to bridge,
yeah,
it's quite expensive. The entry fees, the early redemption fees, the penalties, the interest rates are quite phenomenal on bridging, aren't they?
You know what? So everyone historically has had a bad experience or have had horror stories around bridging finance. Now, I'd agree with bridging used to be expensive, and it no longer is, to be honest with you. As little as sort of 5-6 years ago, bridging was 15-16% per annum. But if you look at rates now, they're extremely competitive, and you can get rates as low as 6% per annum, which is very close to actual mortgage rates if you've got a bit of an adverse or a checkered background. So bridging is very, very competitive, and it plays many roles in becoming an investor and wanting to buy property. And one is, for example, if you're purchasing a property from an auction, you're up against time. It's usually 28 days or 56 days. Now, as mortgage brokers, we can't guarantee our client to get a mortgage over the line within that time frame. And that's where bridging comes into play. And that's a great tool that you should have in your toolbox. And as advisors, we want to provide you with the most competitive terms, but most importantly, in a timely fashion. And clients understand that, you might need to pay a bit more to get the deal over the line, but because you've calculated that purchase in advance, i.e. bought it at a great price, you're going to add value to it, and then we're going to refinance, 3-6 months later to get out of that bridge. That's where you're going to make your money and release that equity out, if you like, plus more in order for you to go shopping again. So bridging's amazing. I think everyone should not discourage taking up that advice or looking at those options. But again, the mortgage market is extremely competitive. Rates are phenomenally low, as we're all well aware. Bank of England's base rate is still 0.1. There's talk of it going up, but who knows when and how much by. But mortgage rates are very, very competitive, and loan to values, Owner-occupied mortgages, we're back at 95%. Buy-to-let mortgages, we're back at 80% loan to value. So, lenders are very, very liquid. They want to lend responsibly, and that's what we're here to do, is find our clients the right mortgages.
So what do you think's caused the bridging companies to become more competitive?
I think the main reason is because they've got an influx of inquiries. Now, whereas a typical mortgage, it's 1.99, take it or leave it. It's an off-the-shelf product. Bridging is very competitive. It's tailored to the actual client credit profile, type of property, loan size, the duration of the loan, and so on. So that market is extremely competitive, and everyone wants your business. And that's what we do as mortgage brokers. We work for our clients. We don't work for the lenders, first and foremost. So it's in our interest to find the most competitive rates for our clients, in order for them to become more rich, if you like, as business entrepreneurs.
Yeah. Who are the most, obviously, you must have your go-to bridging loan finance people. Who are the most commercially astute bridging companies out there at the moment?
Yeah, so we typically get at least a couple of phone calls every day of the week saying, we're new to the market. We want to help you. Have you got any inquiries that you can reach out to us? Now, with bridging, you've got to be very careful with who you do business with, because on a Monday they'll provide you with a set of terms, but then on a Friday the goalposts will totally change in a negative effect. So we work with probably, I would say, half a dozen bridging lenders. And for that reason, is because we know they're not going to change their goalposts. They're going to stick to their words. And most importantly, they're going to meet the deadlines that we expected on day one. So if it is an auction purchase, they're very well aware of the date that we need to complete by. We've then got the power team around us, like the conveyancer, like the surveyors, that are all on the same page. But for example, in the bridging market, Simon, your question, who do we work with? We work with Glenelg, we work with MT Finance, we work with MFS, we work with Precise, we work with Cufflink, Abermore. There's so many lenders out there, but that's just a few that we our go-to in our in the first instance, I should say.
So what are the key things that somebody should be aware of when they kind of approach a bridging finance company? There must be some kind of pitfalls or top 5 tips that you should be aware of. These are basic things you need to understand.
Right. So you've got to be conscious of a few things. First and foremost is the interest rate. So it's not going to be a 2% rate. You're looking at between 6 and 10% per annum. The other thing you've got to be aware of, you've got to pay both sides of the legal fees. So you take care of your own legal fees as well as the lender's legal fees. Other major things to consider are valuation fees, which are standard, but they can be slightly more depending on the type of property. And the other thing is the arrangement fee. So lenders typically charge an arrangement fee of 2% of the loan amount. So that can be quite a costly exercise, but it's part and parcel of the finance structure. Now, the beauty about bridging loans are typically you don't have any ERC penalties. So ERC stands for early repayment charge for your listeners. So you can take out a bridging loan on the 1st of August and repay it on the 1st of September without incurring any penalties. Most lenders have a minimum 1 month or sometimes a 3-month deferral period that you can't repay within. But typically, if anybody wants to take up bridging, the likelihood they're going to need that loan for at least 3 months by the time they've obtained any planning permissions or permitted development approvals from the local councils in order to do the conversions and so on. So arrangement fees, valuation, legal fees, they're your key ones to consider. In terms of prepping yourself for it, the good thing about bridging loans is the interest is retained for the duration of the loan. And what that means in simple terms is, like a traditional mortgage, you have to pay on a monthly basis. Whereas on a bridging loan, you don't pay the mortgage or the finance company on a monthly basis. And the simple reason is because the lender has retained that interest owed for that duration up front. So that helps with cash flow. You don't need to worry about it. Now, we always advise our clients to, if you think your project's going to take you 3 months to complete, we'd always recommend our clients take out a 6-month bridging loan, and that's to foresee any negative effects when you're doing your conversions. You might have COVID Part 5.0 coming up, or the costs of labour have gone up, or the materials not available. And that way, that if you don't complete within that time frame, you don't have to pay the extortionate fees of extending the loan out. So extend the bridging loan out slightly longer. Even if you do repay in that 3 months rather than 6, you'll just be reimbursed with the interest costs that were unused. So it's not lost money from that perspective.
Do they allow you to sort of roll up quite a lot of those fees as well into the debt? Because obviously if you're upfront with arrangement fees, you've got 2 sets of legal fees, you've got your survey fees, you're probably looking at around about 10 grand's worth of fees. Are you able to kind of add that on?
So the valuation fee, legal fee needs to be paid in advance, and that's prior to drawdown. With regards to the arrangement fee, that's where the chunky fee is in part of the whole deal. That can be rolled up into the deal, but that's subject to the loan to value. So we haven't talked about it, but typically loan to values in the bridging market is around 75% of the open market value or the purchase price, and that's subject to valuation. So the lower of, so 75% is typical. Of how much you can borrow. So depending on the deal and the structure of the finance, yes, it can be rolled up, but again, we just need to know a bit more about the underlying costs and loan amount. Yeah,
so you need to sort of come to the deal with some money in your back pocket.
Yeah, that's for sure. You know, there's a lot of commentary, especially online, around no money down deals and so on. You know, it does happen, and I'm sure people do make a lot of money from that. But from our side, from our perspective, you know, to get into any bridging loan deal, you typically need around 35% of the purchase price, and that will take into account solicitors' fees, valuation, surveyor fees, and the arrangement fee. So I always say you need to have around 35% to get into any bridging loan deal, and that puts you in good stead to get the better rates, and then the ball's more in your court and it's more favorable from that perspective.
Yeah, it's good advice.
And just to add to that, Amanda and Simon, if somebody hasn't got cash collateral to put up, i.e. that 35%, but they own a load of investment properties in their portfolio which are either unencumbered or 50 or 60% geared, bridging lenders can also take those into account and take a comfort charge on those properties. So you don't necessarily need to be cash rich or deep pockets on day one. They can take into account the background portfolio as well, which is a nice little add-on.
Right. Okay. So just in terms of your sort of experience, you mentioned about acting for partnerships or individual private landlords or companies. How are you finding the mortgage market with, say, people that are looking to incorporate, which is obviously, it kind of oscillates really, but it's generally quite a hot topic of people looking to feel that their answer to the panacea is to incorporate their property portfolio, and that they look online at various individuals, various companies that can do that, or they believe they can do that for them. But sort of obviously one thing that we're always keen to tell our clients, certainly that come through the door, is speak to yourself primarily, because you need to look at what your current mortgage deals are, and also look at the way in which those lenders are going to respond if and when you do want to incorporate. So what's your views on that?
Yeah, no, I think it's imperative that everyone takes up the right advice and from the right people. And Amanda and Sam, we speak often around clients are looking to incorporate or create partnerships. It's not necessarily the right thing to do, but you won't know that unless you've got the relevant advice from the experience and the professionals, and that's like yourself. So for your listeners out there, for those of you that have owned property historically in your personal name, and because of Section 24 coming into play, and now you can only offset a certain amount of mortgage interest rate relief in your personal name, it may not be advantageous anymore buying property in your personal name. But we always recommend to our clients seek relevant advice. And the beauty about your firm at BHP, you've got Amanda yourself from the legal perspective, and you've got Simon from the accounting perspective and the tax position. So, it's a great team to have around you. And if you are looking to scale that property business and make it a professional business, the last thing you want to do is buy property, but then let out pay a lot of tax for unnecessarily because you haven't taken up the relevant advice. Now, what we do at OMB is we provide our clients with both sides of options. So we'll provide them with a buy-to-let option in their personal name for a mortgage perspective, as well as a limited company. So the clients then got 2 mortgage quotes and they can compare apples with apples with. Now at OMB, obviously we don't give any tax advice, and that's why we partnered up with the power teams with the likes of yourselves, who we refer to, and that's where the client can ask more bespoke and niche questions to their personal circumstances as well as their portfolios. But we have seen a huge influx in limited company transactions. I would say About 70% of our buy-to-let business is via a limited company, and that's for obvious reasons like the offsetting of tax in the limited company. And another reason is that the rental calculations in a limited company is a lot more advantageous than purchasing in your personal name because the limited company is stressed at 125%, even if you are a high rate taxpayer, compared to 145 typically if you're a high rate taxpayer and you're looking to buy in your personal name. But for those listeners out there that are looking to incorporate those portfolios or create partnerships, I'd encourage you to contact Simon and Amanda to discuss those portfolios in more depth, and the likes of ourselves at OMB around the costs of borrowing in a limited company, because yes, the rates are higher in a limited company structure, but again, there are advantages. But let's talk about the advantages and disadvantages, and then we can make that plan together with yourselves as well as a client.
And the lenders seem favourable in your experience to people that are looking to transfer their portfolios from personal names into company names?
Yeah, you know what? It's a bit of a grey area at the moment. It has been for many years because the lenders want to lend, but what they don't want to do is get into hot water with the revenue and the other tax side of it, because they're not tax specialists. They're relying on the accountant, the tax advisor, and then the bank's legal team to represent them and ensure that the client is paying the right amount of stamp duty and or the right amount of capital gains tax. So the lenders are fully aware of clients looking to incorporate and create partnerships. What I would say is there's about 40 odd buy-to-let lenders in the market, of which 20 odd lend in the limited company space, and that's been growing over the last 3 or 4 years for those very reasons, that because people want to borrow in a limited company capacity. So I certainly believe that's going to be the way forward, and we've seen that for obvious reasons through the trends that we've seen. Lenders are afraid to lending to partnerships, lending to trust, lending to offshore companies, lending to UK limited companies as well. So it's a paramount market. It's very, very advantageous, and lenders are willing to lend. But again, as long as the client is doing the right thing and they're not avoiding tax, put it that way.
What clients do wrong when they're applying for these mortgages? There must be a way or a tick list to make things less painful for them.
Yeah, so every lender's got their own what we call a shopping list that we have to adhere by. So most lenders are pretty good. So because we work with so many different types of lenders in the market, we know what they're going to require up front as soon as we submit an application. So we'll ask our clients for the basic information, the basic requirements, I should say, plus any further requirements as per the lender that we're applying to. So we try to make it as seamless as possible. And that's another thing that I would certainly tell your listeners, please speak to an experienced mortgage brokerage when you're applying for a mortgage, because the market is so complex. The market is so competitive. And if you just go to your bank where your salary gets paid to, that's all well and good. You're more than welcome to, but then you're only going to get one set of mortgage rates, and it might not be the most competitive. And as you're all aware, a lot of clients have they may have a checkered credit history, they may have various income streams, or they may have large portfolios in the background, and not every lender accepts those types of clients. But that's the beauty of using a mortgage broker. One of the advantages, we'll seek the most competitive rate, but house you accordingly, and we'll match you up. We call ourselves the Cilla Blacks of the mortgage business, matching you up.
Well, really, if you look forward now in the next few years, most people post-COVID will have some kind of checkered history.
Yeah. And sometimes, a lot of the times, our clients who have a checkered history were not aware of anything, that they had a checkered history, or it actually didn't mean it shouldn't have been on their credit profile in the first place. And what we do as advisors and the team here at OMB, they will always ask their clients to download a credit report, just to make sure that the deal that the application we're placing with the lender fits their criteria. The last thing we want to do is throw mud at a wall and hope it sticks. That's what we don't do. We want to place the business with the right lender and ensure it goes through, because the only way it'll fall over or out of bed is on valuation, which obviously we can't control. But what we can control is everything prior to the security valuation.
So it's getting your ducks in order. As with everything, really, you kind of need to put a bit of effort into the planning before you actually launch yourself into the property market.
Yeah, I agree. And the last thing you want to do is, spend money willy-nilly and not take up the relevant advice. And I think for your listeners out there that are portfolio landlords that want to grow and scale, you know, in our business, you guys know this as well. You know, every day is a school day, and if you don't, we don't know all the answers, but what we do know is the right people that can give us the right answers. So I'll pick up the phone to you guys and say, listen, I've got this client. What would you do? Or I will simply connect you guys up on an email, and then you guys have that conversation, because we don't all have the answers, but as I said, what we do have is the right people that we can refer to.
So in terms of clients having that sort of numbers of properties, are there certain lenders that are get a bit anxious once your property reaches a certain number, or how do you find that works?
Yeah, so predominantly the high street are quite vanilla in terms of their criteria and who they lend to. They are getting better and better, to be honest with you. Some lenders will lend up to 4 properties in the portfolio. Some will do up to 10 properties in the portfolio. We're quite fortunate. Our average client has, you know, it's over a dozen properties in their portfolio. Some have over 100 properties in their portfolio. So we match make them with a relevant lender. But what I would say is, specialist lending is not as expensive as it was a few years ago. The rates between the specialist lenders and the high street lenders is becoming more and more squeezed. And what I mean by that is the rates are not too dissimilar to the high street. But again, it's not the cheapest rate that fits every single lender. And as you said, Amanda, some clients have larger portfolios than others, and that will only mean that we have to go to certain lenders. Somebody might want to purchase or refinance a property that's ex-local authority or a high rise or has deck access or has Japanese knotweed, but that means we'll only have to then go to specialist lenders. So, you know, it's we'll always aim to get the lowest rates, and who doesn't want to have the cheapest rate? But again, we need to be fully aware that it's not just about the rate, it's not just about the property, it's about the client, the adverse, the income streams, the experience, and so on. So, you know, mortgage, our business is fun. It's very competitive. We enjoy it. But I tell you what, it's very, very stressful. And the stuff that we do behind the scenes, we don't even tell our clients. They're like, oh, you made that look quite easy. And I'm like, well, trust me, it wasn't easy. But we don't let you know about that, because we don't, you know, that's our business. That's what we do. And that's what we get paid to do, right? So we try not to burden our clients unnecessarily.
Yeah. So on the whole, really, there's not very much business that you feel would be impossible to place.
You know, I don't want to give it a guarantee that, you know, we'll guarantee you a mortgage tomorrow. We can't guarantee anything in life except death and tax, apparently. But other than that, you know, we'll try our best, because ultimately, if we don't provide you a mortgage, we don't get paid. So it's in our interest to find you the right mortgage, most importantly, and find you the right mortgage. But again, you know, we have to let some clients down, unfortunately, and we don't mean to let them down. It's just that we can't place your business, or the lender that we are want you to pay you up with is too highly priced for your liking. It's not affordable, so which is fine. Then we make plans that, you know, do this, line your ducks up, and we'll see you in 12 months or so. So, you know, we'll always try to find you a solution. If we can't find you a solution, then what we'll do is put what do you call it? Next steps in place, if you like.
Yeah. So obviously we've majored on mortgages. Is there any other sort of financial advice, tips that you would give to people listening regarding getting their ducks in order, or other sort of services you're able to provide?
Yeah, sure. So in terms of other services we can provide, you know, we provide buildings and contents insurance. We also provide life cover. You know, the debt that you take on doesn't pass on your passing. You know, the debt will always lie there in the background. So you've got to take up relevant life cover, income protection, critical illness cover, because what you want to do is make sure that your family in the background are secure and they've got the means to pay the mortgages. And especially if you're the breadwinner or the only income earner in the household, you want to make sure that, you know, your family, your loved ones are looked after. So, you know, life cover is a key. You know, it's not just about the mortgage. Make sure you've got cover in place. So life cover, critical illness, income protection, buildings and contents insurance. Other than that, you know, we've got a great power team around us. And I mentioned it before, you know, Simon and Amanda yourselves, you know, we've linked arms with you guys in the past and we'll continue to do so. And for us, it's about relationships in our business. You know, we'll always aim to get the client the mortgage. Sometimes our clients don't need mortgages on day one because they're cash rich or they want to buy it in cash. But what they may need is tax advice. They might need conveyancing support. They may need an architect. They might need a planning consultant. And we've partnered up with key people that we know, we like, know, and trust. and that we can refer to. So, we feel like we're an all-rounder firm. We're good people, we're honest people. We enjoy playing golf with our clients, or going for drinks and lunch like we have in the past. So,
Watching Liverpool.
pardon?
Watching Liverpool.
Watching Liverpool play, yeah. I'm not an armchair fan, so I live in London, but I do travel to Anfield 3 or 4 times a year. It's a long old day, but it's fun.
Charity going to Anfield. Anyway, do you have any horror stories? Clients like to hear horror stories of how things could have gone right, but they went pear-shaped at the last minute.
There been any horror stories? God, you know what? There are always horror stories along the way, things that were unforeseen or undisclosed. But what we'll do there is we'll work with our clients, work with the lenders, work with the surveyor firm to say, we'll put our hands up. We weren't informed, or we didn't do this, we didn't do that. But what we want to do is put things right. I'm sure there are nothing comes to my mind immediately, but I'm sure there has been, because we're not going to lie. There's always going to be obstacles, things that were not ticked off and so on. But what we'll do is, we'll put things right. That's our promise. We'll do our best to find you the right home. But again, put things right if it's well, it's not going to be intentional, that's for sure. But anything unforeseen. The other things I wanted to say, I think as Amanda's previous question was, top tips and how to prep yourselves. Make sure your passport's valid. Make sure your driving license is valid and it's got your current address on there. Download your credit report, for your listeners that are looking to buy their first home or even move home, download your credit report, make sure everything's in place, and it should be in place, and the right credit agreements are on your report, or then shouldn't be on your report. The other thing is get on the electoral roll, it boosts your credit scoring. Electoral rolls are very important here in the UK. Get yourself on that. Bank statements, if you're employed, we're going to request 3 months pay slips, 3 months bank statements. Where the real quirky underwriting gets involved is for your self-employed listeners. So if you are self-employed, whether you're a limited company or a sole trader, we'll need up to 3 years accounts. We're going to need up to 3 years tax calculations alongside the tax year overviews. So these are the administrative documents that you can download or ensure that they're up to date and they're valid. That will help us get the mortgage approved, because we can't submit an application without those 4 or 5 things that I mentioned to you, plus anything further that we require, which is bespoke to your mortgage.
Yeah, that's good advice. I think one of the things that we still struggle with even now is certified ID for clients and doing our money laundering checks. And it's just, I don't know, given it's been something that's been necessary for 15 years, it's always such a burden trying to get a client to provide us with a certified copy of their ID. So
and we need it for part of our AML checks. We need them certified as well. And the beauty about Zoom nowadays, and COVID's quite a blessing in some certain degree, that we can do a lot of the checks via Zoom now as well. So we help clients across the whole country. So it's England, Scotland, and Wales. It's not always possible to meet our clients face to face, even though we've got an office and they're more than welcome to see us. But things like Zoom play a great factor. They can use the post office to verify their IDs, and there's other checks that we can do in house for our anti-money laundering and compliance tick list, if you like.
Yeah,
that's great. Okay,
well, fantastic.
Great. Always informative, and hopefully everybody enjoyed all the tips and pitfalls and things to actually do properly to enable you to get the mortgage and lending for your next venture. That's great. Thank you.
Yeah. Well, thanks very much, Ahkil, and we will no doubt see you very soon.
My pleasure. Thank you, Amanda and Simon, and we'll see you soon.
Yeah, smash him. Thank you. Bye.
Great. All the best.